for Monday, 27th of April 2015. As you all may or may not know, that as we come into May, we come into the shadow of some abilities for markets to change trend. Full stop, new line. The US dollar has been in a fantastic bull run and has gone into recently into a big fourth wave style pattern. Full stop, new line. And as we come into the early May time period, we might get some changes in this. Full stop, new line. US dollar index, DX, new line. Now we are long, or were long, the US dollar index. We moved our stop loss up to just below break even. Full stop, new line. It has gone down towards where we would normally expect a good retracement. Full stop, new line. We are stopped out of that trade, and the question is, do we want to get back in with the direction of the prior uptrend? Question mark. And the answer, we're looking at the 60-minute chart. We can see that 96.87 is a logical target on a bigger time frame. Full stop, new line. However, it's probably a little bit too close for us to be that interested in on the intraday time frame. Full stop, new line. So what we might do is buy a break back up above 97.65 to re-establish the position, or buy dips to 96.28. use a stop loss at 96.05 if we're buying a dip. Or 97.10 if we're buying a breakout. So at this point, you can hang loose. If it gets worse, we can expect 94.25, full stop, new line. So at this point, we can hang loose. If it gets worse, we can expect 94.25. Probably the best idea is to just be wondering whether everybody is telling you to buy US dollars. And if they are, it's probably a bad idea, full stop, new line. Currently, we can see that volume has been good on the upside, but even heavier on the downside, full stop, new line. So it's a little bit suspicious as to whether this will keep on going. And so I will be conservative as to what we should be doing, full stop, new line. If you decide to be short, have your stop loss in the middle at 98, full stop, new line. EUR USD, new line. There's certainly a change in the way this is behaving, but we have to bear in mind that it was Friday last week, and Fridays can confuse and confound. At best, if it continues not to be a Friday-Monday event, we might get up towards 1.11 or 1.1036. If you feel like being long, have your stop at 1.0737, full stop, new line. GBP USD, new line. This has moved pretty beautifully. It is now on what Bryce would call a reverse cross. and now it's on a reverse cross, full stop, new line. And now it is on a reverse cross. Full stop, new line. The question is everybody asking you to buy the pound and sell the US dollar? Question mark. Let's go through the short-term bull horns warnings, new line. We have short-term bull horns warnings in the following currencies, new line. US dollar index, DX, new line. Yet the issue with this is it probably has not completed its move. This is a triangle, but there could be a move down towards the fourth wave of lesser degree around about 94.16, full stop, new line. So don't get too excited about the US dollar going up on this signal, full stop, new line. Brazilian USD Brazilian real also has a bull horns warnings. USD CAD also has a bull horns warnings. And it needs to go in its triangle and visit down to 1.2013, full stop, new line. So that doesn't signal greatness for the US dollar. We have short-term bear pause warnings in the following currencies, new line. GBP USD. And at the moment, you would think that the volume could take it up to 1.5360, full stop, new line. So if you're going long, have a stop loss below 1.49, hoping for 1.5360, and buy dips down towards 1.50. NZD USD, new line. We still have our order to sell the Kiwi up at 0.7811. That has not been executed. Full stop, new line. And it's not enjoyed the benefits of the break up. So the best thing is, if you are still long, maybe you just nudge your stop to 0.7542 and you might see it down at 0.74, full stop, new line. Or you might see it up at that 0.7811 area we want to short it at, full stop, new line. As you can see, it's simply a corrective pattern in nature, full stop, new line. USD CAD we have already looked at, full stop, new line. It has a little bit of a double bottom, so if you were tempted to go long looking for the possibility of 1.24, have your stop loss at 1.2144, full stop, new line. USD CHF, new line. I do still want to sell this just because of the pattern, and it looks like there is somebody, maybe it's the Swiss National Bank, trying to hold this up. If it gets going below 0.9460, floodgates will open, looking for 0.9095, full stop, new line. We've tried it before and lost a little bit of money going short the US dollar, but I think it's probably the best trade you can do, full stop, new line. USD JPY, new line. This has been smashed a bit. Still looking for 118.03. Or even better, 117.03, full stop, new line. The trouble is, every time you think about shorting it, the Japanese government comes out and releases more money into the system, and that doesn't really help, full stop, new line. AUD USD, new line. The other day when I met with the wealthy wife of a Chinese/Hong Kong solar company owner, she asked my view on the Australian dollar. She cared not about anything what I thought about shares. What she cared about was the Australian dollar. And I guess that means that she's thinking of buying property in Australia, full stop, new line. In any event, we see a triangle, we see a breakout, and the logical target is 0.7911 on the top side for the Aussie dollar, full stop, new line. If you are going long, your stop is at 0.7725, and you might look to buy dips down to 0.7787, full stop, new line. It is still a corrective pattern, just like the Kiwi is, full stop, new line. AUD JPY, new line. Still doing okay, looking for 93.27 on the top side. And the stop loss is at 92.54, full stop, new line, if you are long. AUD EUR, new line. Still really not doing anything. If you are long, you might have a bold stop below 0.7060 or a scared stop below 0.7140, full stop new line. You might hope that it breaks above 0.7244, in which case you'd buy some more with a stop loss below 0.714, targeting 0.7349, full stop new line. AUD GBP new line. This continues not to be really exciting for us. But still, it's got some smell of correction in it, so maybe a dip down to 0.5128 would be a nice attempt to buy some Aussie pounds with a stop loss below 0.512112. And if it fails, expect 0.5034, full stop new line. AUD NZD new line. There is life in the old girl. It looks like the May pattern is still alive, that the Aussie could rally. That's fantastic. This is probably something we should be looking to own on a PHG trade. It's gotten above 1.02. Okay, so we're going to look to buy dips to 102.5 with a stop loss below 101.50, targeting first instance 103.18 and 105 and 104. And this is just the May-Day rally. So that's quite good. That's starting to show some niceness for a change. Oh, shit. So I'll just change over into commodities land for us. Be there shortly. Do we have any questions while I do this? All good. Great. So possibly a few of the things are starting to change that I've had the feeling might at the moment in the currencies. It's looking a little bit, you might see perception change. Change a bit for the US dollar. Welcome to the Commodities and Futures Speed webinar for Monday, the 27th of April 2015. With the US dollar going up, down, and currencies going up, you might think that the gold price would go up. Full stop, new line. It hasn't. Full stop, new line. So the Australian dollar price of gold has probably fallen as the Aussie dollar goes up and gold goes down. Let's have a look at that. Full stop, new line. There has been an argument in the popular press that the Aussie dollar against gold would save gold miners in Australia. We can see that, yes, between mid-March and early April, there was a five-wave structure to the upside of sorts that may have made you think that the Aussie gold price was going up. Full stop, new line. But when you look back at the monthly chart, you can see that the Aussie gold price is still in a range bounded effectively by $1,300 and $1,750 or $1,700. And it's right in the middle of that range now. Full stop, new line. So is there a lot of joy for Australian gold miners? Question mark. The answer is probably not, given this decline. Full stop, new line. You might find some joy around the $1,475 mark per ounce. Full stop, new line. So just seeing here, this is the decline since April on the daily charts. Full stop, new line. And this is the range really since 2010 or 2011 between $1,300 and $1,700 on the top side. Full stop, new line. So I have seen people saying how good Aussie gold miners are. They might wake up with a bit of a headache this morning. Full stop, new line. Or more correctly, a stomach ache. Full stop, new line. We have short-term bear pause warnings in the following commodities, new line. Crude oil, new line. This makes a bit of sense because it's got a barrier around the $60 mark or just below it back from February. At around $58.69, full stop, new line. Should it get lifted above there, the fun begins and we head towards $68. Currently we are long crude oil and we are not changing our position or stop. Euro dollar interest rates. GE, ED, Euro dollar 90-day interest rates. Full stop. Now these are sitting around the 0.31% area. It simply means that banks can often borrow at that sort of rate for 90 days if they want to borrow off the European market. Full stop, new line. And it's been going up very well since 2009. And you would think it might be able to fall back down at some stage. Full stop. But politics aren't going to let it. New line. Lean hogs, new line. These have had disastrous set of months, but now it's coming into a time where you could expect a triangle to form and it to churn sideways for a while. Full stop, new line. So if you are thinking of buying lean hogs, it's not a bad idea, but don't expect a lot, just a retracement. And it has retraced with the bear pause warnings. So if you were long, raise your stop to 75.7. Heating oil also has a bear pause warnings, also is headbutting something. We've ignored this because of the seasonals. If you were long, have your stop at 1.87, full stop new line. RBOB gasoline, also on bear pause warnings. Volume is not showing us that this is bad, and I think you can continue to be looking long on RBOB gasoline with a stop loss below 1.92. New line. Sugar is also on bear pause warnings. We have been buying this on the basis of options, longer dated options. If you are long, have your stop now at $12.50 as it is headbutting the cloud, and we haven't seen good enough volume just yet. On the dailies to drive it through. The monthlies and weeklies are interesting, but the monthlies are not yet showing us that it's broken a new monthly high. So maybe just take a little bit of profit or tighten your stop. We have bull horns warnings short term in the following commodities, new line. US dollar index, new line. Kansas City wheat, which does look ready to do something. Notice the huge volumes that it has in a month. And it has 33,000 contracts so far this month, full stop new line. Notice, however, it is in a fifth wave pattern, this being the fourth, and possibility for one more decline. So maybe expect around the 500.75 area to finalize this decline. If you're trying there, stop should be at 4.8. COMEX silver, we have been short this on silver, and I want to still continue that short, but we're going to drop our stop down to $15.97. Corn. Corn. This has been pulverized. And I think the only thing we can think about is buying a break above 3.80. Oats, ZO. This has also been pulverized. We were looking to buy a break above 2.70, and luckily we were not triggered into that trade. Seeing as we've had a look at a lot of markets already, we'll run through the primary ones we haven't missed. Full stop, new line. Baltic Dry Index, new line. I'm not sure you would like this last few days as your ECG monitor if you were in hospital. Full stop, new line. It's frustrating. A little bit up and it will start into trend. A break back down and it will start into downtrend. At the moment I cannot read this, but I think a break up would be the thing to go with, as would be a breakdown. Full stop, new line. It's in such fine balance. Full stop, new line. Uranium, new line. Still falling down. In fact, it's hit my target at 38.6, it seems. No, it's still falling down to 38.24. Full stop, new line. Chinese iron ore, new line. This is definitely where the fun and games are, and 54.48 is the near target, and more likely $60 or $65.60. Full stop, new line. Finally, the big iron ore players are trying to restrict their increase in supply, and that's a good thing for iron ore prices. Full stop, new line. Do you think they will sack themselves though? Question mark. No, they will probably give themselves a bonus. Full stop, new line. Gold, new line. Gold broke down again yesterday. It's rallied a bit today. It broke down below the 1180 area that I'd mentioned as the breakdown point. And volume was fairly high, so we would expect that you could be short with a stop above 1200, hoping for 1160 or new lows. Full stop, new line. Rough rice, new line. We are long on a PhD trade. We wanted to buy long on a PhD trade, and that has not been executed. Simply raise our stop loss up to 1.9332. We are short the 30-year bonds, and it is rallying back up. We're going to lower our stop to 1.64 and 22 seconds. Nothing much to think about there. We have been stopped out in the dollar index. Boom. For break even. And I'm not going to put those on. Now metals, we've moved that stop. We'll look at orange juice just quickly, and I'll call out some more long-term bear pause warnings. OJ, not going on with the job really. Stop should move up to 108.95. So we're long at 112 and it's struggling. Cotton, we're long at 63.34, a break of 63.75. And I think that is the that went. That can behave differently to US dollar related things. It's a bit of a mind of its own. And that's good. Stop can be moved now to here at 63.49, 63.50. Might be at that one. Yeah, we got in on that one. Sugar, we're looking to buy at 12.40. Which we got filled at the 22nd. Entered. And probably move the stop up to 12.50. Now lumber looking to buy dips to 12.48 or a break of 12.53. Yes, I can never remember this code. Okay, 12.58. We're long. Dips to 248. 242 is stopped. Did we get filled? Yes, we did, because we had it afterwards, so that's okay. That's good. So what day was that? 22nd also. Oh, probably should bring up to 248. And go through the bullhorns and bear pause warnings. So we need to go to equities land now. We've raised our stop losses up in sugar, which has been entered, and lumber, which has been entered. Check the trade logs for details. We've raised our stop loss up in cotton, which is long, full stop, new line. Coffee is still not doing anything, new line. Cocoa is still screwing with our mines, full stop, new line. We have long-term bullhorns warnings in the following commodities, new line. HE, LH, lean hogs, new line. LB, lumber, new line. SB, sugar, new line. ZM, SM, soy meal, new line. ZO, soybeans, new line. ZW, wheat, new line. Okay, let's get out of here and get into the world indices room, because we're probably okay on time compared to where we were. I'll talk to you shortly. I mean both oats and beans. Sorry, you're quite right. It's both oats and beans. And that didn't work with the typing. Sorry about that. Blame the machine, or I can blame me. Probably blame me. We'll watch all the broker recommendations and then we'll pounce on the things. Okay, so I'm going into the next room and I'll talk to you soon. Thanks for picking that up, Mark, too. Bye.